Hello and welcome to another update video about STX. STX is in a potential 1-2 setup. As we said before, it's been a while now that we've covered it for the last time covered. But anyway, it hasn't moved that much and it's still in this yellow support area, and it has moved now within potentially a sideways triangle. Okay, so it's not doing anything that we didn't expect or anything. It just moved sideways. And I count that here as a wave 4 at the moment, and it could, pretty much like BNB in a very similar structure here short term, could break to the downside, and the next support level is at 41 cents. That's the 61.8 retracement level, but ideally it goes a little lower, not because I want it, but it is just likely. It doesn't need to go all the way down to 29.9 cents, but because this looks so much like a triangle, it feels likely that it's breaking to the downside, just because this could be a wave 1, this could be a wave 2, this could be a wave 3, a wave 4 triangle, one more low to come. Of course, it could go up from here. It would only be it could only do that really as a diagonal. These are not really likely structures to focus on. But if it goes higher, when do we know that the triangle is invalidated? Basically, that it will not break to the downside. That would be a break above this green breakout level to the upside. Invalidation point of the triangle, also at the same time breakout point to the upside. Here we talk about the 55.8 cent level. It's that if we deal with a diagonal, or no, with a triangle actually, yeah, and we are looking at the subwave structures of a triangle, it is typically that A wave that, if broken to the upside, in this case would invalidate it. On the flip side, we expect it to break to the downside. At least I'm watching for a break to the downside, and a confirmation, yeah, that we are doing that is obtained with a break below the red line. So we typically say that a break below the D wave low of a triangle is a first indication that is breaking to the downside, to the opposite side of the E wave. And that level is at 44.8 cents. But because triangles can always extend further until they are really broken, we have to be careful with that. It's really only an early indication. The so-called confirmation level that a triangle is broken is below the B wave low, and that is at 42 cents. So if we see a break below 42 cents, this triangle is officially broken, and it should then follow through to the downside. Now, what we could do, we could use the height, yeah, of that triangle. So normally what you do, you extend the trend line a bit, and then we go to the beginning of the triangle, so roughly here, and then we take that vertical line and we add it to the end of the E wave. Now, that could still go a little higher, that E wave, but let's just assume it's finished, just for measuring the target, and it could take us down to around about 34.5 cents. That's, at least if we measure the height of the triangle, it is one possible way how to calculate targets after a triangle breakout, after a triangle breakout. However, it's not super reliable, okay? So it's just sort of for orientation. So if you ask me, it should be between this level, round about 34.5 cents and 29.9 cents, the 78.6 fib level. Anything below 29.9 cents will make this chart rather bearish. This is critical support. If a break below the 78.6 retracement level occurs, then I don't have any trust that STX could actually turn around here and rally in a third wave. I will lose, that trust. Okay, I don't really have much trust into this chart anyway. Okay, not until it shows some kind of an impulsive reaction from support. So I don't want to say, I'm bullish or anything. There are, in my opinion, clearer 5-wave movements to the upside. For example, CFX or LDO, we're tracking them as well. Similar structures, but I don't really like so much the look of it. Nevertheless, we give it a chance as long as it's holding above 29.9 cents. What we could try as well is to add a trend line here. We've had a similar situation on the Veracity chart where that trend line broke quite rapidly, okay? And then we saw quite a significant rally. And also here, I want to make sure that you understand there is a trend line that we can potentially track. Break above it would basically go along most likely with a break of the green breakout point anyway. So yeah, this is Not sure if it gives you any additional edge, that trend line, but it certainly is something to watch. Yeah, so basically we can still give it a chance to rally in a third wave later. But first of all, it needs to form a low. With that, I mean, we need to see ideally another low, okay, in this yellow box, a break of the triangle to the downside. That would be good for the chart, in my opinion. If it then can develop an impulse after that low, some kind of a small impulsive reaction to the upside, and ideally break above the green line, then we can add a support area, a small support area for maybe the next trade setup. And then it could really rally to, well, $1 and beyond, right? Even essentially in that third wave, it should certainly go above the $1.34 level, 35 level, this swing high that was made in March. So yeah, it's not, I'm not saying it's a great setup. It's just something to observe. I think the downtrend is not over yet, but if we see a break above the green line, then it's certainly worth watching. Yeah, that's my update about stacks. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.